about due for a pullback. So we're looking for a counter trend trade here that should take us back at least to one. First level will be 151.06, which is a full point below, and then the 2-week value is right back here at 150.18. So let's just take a look at this now. We were looking at the very short term. Let's go back to the 2-week view, and you can again see these levels. This is the key area, 150.19. We took off, don't forget, from 147 is where we bottomed here at the end of the year last year. We were down here as low as 147.05 towards the middle of December. So this has been one heck of a rally, and I think so goes the beginning of the year. It's usually not the way the end of the year finishes. I do think bonds are going to be much lower by the end of the year. Still, the big trend is broken, and if we pull back even farther, you start to see that is very, very true, and we're coming into a major area of resistance here, 153, almost 154. So here's where we stopped right now, 152.75, banged right on that, and I think we're going to come back and at least test back to this 151, and that's why we started with those short term. But you need to know where you've been, where you're going, and this is why we look at multiple time frames. But I do think that the bonds here have. Today was kind of a blow off in the most recent move. Not saying it can't go a little bit higher up here to the push towards 153.14, but probably not today. Let's look for a pullback the next couple days. Again, tomorrow we have the jobs report. That could take us up to that level, 153, right towards 154. But I think that's going to kind of put a fork in it once we get towards 155, and then we will reverse back down if we don't. So there's your contingencies, getting close to tops here, but may have a little room tomorrow with the jobs number yet to run a little bit further higher, trap some more people for the remainder of the year and the season. Bonds are not back in a bull market. Sorry, folks. It's just not going to happen.